Well, hi guys. I'm so excited for day 3 of our welcome week, and I can't wait to get into this topic of finances and making sure we are business smart with our money. And I cannot wait for you guys to meet Caleb. I'm going to read you his bio and then he's going to take it away. But Caleb Pepperday is the owner of Advanced Practice Planning, which is a firm dedicated to providing financial planning and investment management services tailored specifically for advanced practice providers. Caleb's journey into this niche market was inspired by his personal connections. His wife is a PA, woohoo, and his brother is a physician. He noticed a gap in the financial planning industry where APPs were often overlooked while physicians received premium services. This realization led him to establish advanced practice planning to ensure that APPs receive the respect and financial guidance that they deserve. Caleb holds notable certifications as a certified financial planner and a chartered financial consultant, bringing substantial expertise to his clients. He also has shared his insights through publications such as CNBC, Market Watch, Investors Business Daily, and more. His educational background includes a bachelor's degree in financial economics from Juniata College in Pennsylvania. So you guys are in for a real treat because he is amazing. He's brilliant at what he does. And in the description down below, guys, of this course, you're going to be able to find a free downloadable resource for you that he has provided for you guys as well, too. So Caleb, thank you so much for your time. I can't wait for you to share your insights with us because I know we're all going to be learning something from you. So I'm going to give you host access and go ahead and you can get started.
Appreciate it. Yeah, appreciate the introduction there. And yeah, I'll just kind of jump right into things here. I have a presentation that we'll walk through here. And then we can, open it up here for questions at the end and then just go from there. So let me do this. Let me share my screen. Okay. Can you see a PowerPoint here?
Yep.
Okay, perfect. So as Colleen mentioned, owner of Advanced Practice Planning, background, have worked in finance for the last coming up on 7 years here. So have a background, worked with all types of clients throughout my time in the industry. So what I've noticed is, working with my brother and then working with other physicians is that there's a lot of people, and no pun intended, everybody and their brother out there is willing and able to help physicians, but there's not a ton of help, or really frankly at all, any help that's out there for advanced practice providers. And, once I started, working with my wife and just kind of learning more about her situation before we got married a few years ago, I just kind of saw a major gap where, most of the advice, to the extent that there was any, was just, individuals out there pitching whole life insurance or pitching some sort of product rather than looking at, a financial plan that one can build. So long story short, that's what that's why I created my practice here. And we're coming up on our year anniversary here in a month. So it's been a great journey so far, and looking forward to walking through a little bit of my presentation here about some medical some tips here for self-employed medical professionals. So again, always just have to do from a compliance standpoint, anything we talk about here today is not intended for personal financial advice. It's purely for educational purposes only. If you have any questions or want to know if this, what we discuss here today applies to your situation, make sure you consult with the financial, legal, tax, or any other professional that you have. So just a little bit of a roadmap here before we dive into things. So we're going to break this down into 5 different sections here. Again, I went through a little bit of an introduction. We'll just break down a little bit farther there. And then we'll walk into a little bit more of a nitty gritty on how to set up your business, how to manage your finances as a professional, and then some tax planning opportunities, investment opportunities as well. So a little bit about our firm. So as Colleen mentioned there at the beginning, our firm helps mid-career and pre-retiree physician assistants make sure that they're on the right path to, financial security. So, the biggest the biggest piece we find in developing a plan for somebody is making sure that everything aligns. So we're not just an investment management firm. We're not just an insurance firm. In fact, we don't earn any commissions off of any products or any recommendations we make. We're more of a consultant. So we basically just get paid directly from the fees that you pay us, and all of that is very transparent. And again, we serve clients nationwide, so that's not necessarily a barrier to working with us. So enough about us. We'll try to dive in here into a little bit more of the nitty gritty here. So what I want to talk about here for the next couple slides is just an overview of business structure. So whenever you're setting up your business or thinking about setting up your business, there's a few different ways that you can actually structure your business from a legal entity standpoint. The easiest and probably one of the most common ways for a sole proprietor or just an individual to set up their business is through a sole proprietorship. And what that essentially means is that your business is kind of just an extension of you. It's very easy to set up. You have all the decision making of the business. Whenever you file your taxes, everything flows through to your personal tax return. So it makes it very easy to set up shop and kind of get your practice established. But a little bit of the downsides is it being attached to essentially you, it opens up a little bit of liability, so to speak, of if there ever were a point in time where there was clients or patients that were unhappy with you, or there was just things that happen throughout the business that you are liable for, it kind of opens your personal finances up to exposure in those aspects. Now, there are ways to mitigate that through personal, liability insurance and other things, or errors and omissions insurance. But it is something to be aware of. It's sole proprietors are easy to set up as far as the business structure, but it doesn't come without its drawbacks. So again, if you're looking for, if you're trying to get in, external investors or trying to bring on partners, really a sole proprietorship wouldn't be for you. But if you're someone that just kind of wants to test the waters, so to speak, and see if your business, has merits and has legs to continue to grow, then it's potentially a good idea, to look at, potentially a sole proprietorship here. We'll jump on here to the next, next business structure. So the next business structure is a partnership. So there's all sorts of different types of partnerships out there. Generally, what a partnership is kind of just exactly what it sounds. So it's a business owned by two or more people. And there's different types of general partnerships. There's limited partnerships. A limited partnership is more for individuals that there's main people that are running the business, and then there's quote unquote silent partners, so more people that are kind of giving funding and kind of they're not necessarily involved in the day-to-day. There's also things called limited liability partnerships, and without getting too far down into the weeds, they offer a little bit more liability protection than just a general partnership. With partnerships, again, they're relatively easy to set up, from a tax filing standpoint. Income or profits flow through to your personal tax return. And you can kind of work with a partner or a multitude of partners there to bring all of your expertise together and kind of create a business that works best for you. Again, there's risk of liability as well. Now, again, there's ways to mitigate that we talked about before. But there's also, potential issues with partners down the road, that it's something to be aware of. And there's, definitely risks, so to speak, if there are issues with partners, or if a partner becomes sick or passes away. There's, procedures and different things that you need to have set up for the business to make sure it's running smoothly. One of the more common business structures, especially, for individuals, and then also for, companies that have more than one employee, is a limited liability company. So So an LLC, I'm sure a lot of people have heard of that before. And really some of the main benefits is the limited, the limited protection or the limited responsibility that you have from a personal finance standpoint. So let's say you were to get sued, for example, for something that happens inside the business. In most circumstances, your LLC is going to cover you from personal losses. And that's one of the biggest benefits to having an LLC. Again, as a personal or a solo LLC owner like myself, my income from the business actually flows through to my personal tax returns. So the tax reporting actually is pretty simple. There's some different elements that you have to consider rather than just filing a typical W-2, tax return, but it's not as complicated as what individuals might think. So, if you're working with an attorney or an accountant, they can kind of walk through a little bit more of the details of each one of these programs or these, structures. Obviously I have a general knowledge there, but they're going to have a little bit more of a specific, recommendation for your situation. Some of the cons too with LLCs is in certain places they can be complex to set up. And also, there are different fees associated. It's not as easy to just set up shop like it would be with a sole proprietorship. The LLC takes a little bit more work. And if you're wondering, if it's right for me, again, I think that it's probably worth doing a consultation with an attorney to see, what business structure is best for you. So I'll stop there before we jump into the next section. Any questions, Colleen, or anything you wanted to add?
No, I actually think you're right on the money with the LLC. I did an LLC for mine, and that's what a lot of the attorneys and financial planners and everybody's recommending for the majority of people because of those reasons that you had suggested. And it does vary state by state, right? So can someone do this on their own, or do they have to hire someone to start an LLC for them?
Great question. To actually file, to actually get an LLC set up, it should be something that you just, fill out and do with the state. So whenever I set up my LLC, I actually did mine online and got approved. My LLC is based out of Montana. So, I paid, I can't remember, maybe like $100 to actually set up the structure. And then, obviously you wait for an approval from there. So you don't necessarily need somebody to, you don't need an attorney to file the paperwork for you. But it's, something that, you might want to get a second opinion on before you kind of make that decision. But the actual, process of doing it, again, it is going to vary by state, but it's not necessarily something that's so complex that you can't do yourself.
Yeah. And then we have a question in the chat, kind of a specific one, but let's see if you can answer. Liliac said, I have one member only LLC. Should I put it under a trust?
Yeah, that's a good question. So you're essentially the sole member of the LLC. As far as putting it underneath a trust, I don't know that how much. Well, it depends on the reason for putting it in a trust. If you're doing it for liability protection, a lot of the protection that you're going to have is under the LLC in general. So, you can put LLCs into trusts. A lot of times people will do that, like with real estate and stuff like that. But, without knowing your specific situation, it's hard to kind of tell that's if a trust is right for you.
I love the financial conversations and so much of the things that we post online, because finances and nutrition is so similar with our answer, because we always have to be like, well, it depends, it's very personalized and it really does depend on each person. So I think that was a good answer, but I think that's an interesting thing, is it really does depend on every person's situation.
Yeah. Yeah, for sure. Sorry, I wish I had more of a direct answer, but that's like Colleen said, unfortunately, a lot of finances the answer is it depends. And it's not a great answer, but the reality is that's kind of the situation that we run into a lot. So one of the biggest things that I see with business owners, and whenever I was setting up my business on my own, is keeping your personal and your business finances separate. Without doing that, you're going to have a real issue when it comes to tax filing at the end of the year. And some of the, the best things that I can recommend for individuals that are starting a business is setting up just different accounts for your business. So whether it's different bank accounts, credit cards, just different, ways that you're paying for bills on an ongoing basis outside of your personal finances. Now you can theoretically pay for expenses through your, like, let's say you accidentally put a charge on your personal credit card that should have been through a business expense. There's ways that you can adjust that. But again, if you're going to do that and you have 10 or 15 or 20 expenses a month times, let's say you times that by 12 months, you might have 100 or 200 or 300 transactions that you're going to have to reconcile at the end of the year. So, my recommendation is that, first step is just to get a bank account set up for your business. And that's actually really easy to do. You can go to your local bank and they should be able to help you, set up those, things that need to get set up there. As long as you have, again, it depends on what type of business structure you're setting up, but you might need to have your social security number handy or your EIN number if you are an LLC to actually get your business established or your bank account. The credit cards. Yeah, go ahead.
I want to ask you about bank accounts really quickly. And you made a good point with the EIN number or your social security, and depends on how your structure is set up. But I guess the more broad question would be, if you have a business, do you have to have a business bank account, or can you just open up a separate checking account and that's just what you run all of your business stuff through?
That's a great question. I'm more conservative in nature, just from a finance standpoint. I would set up a business bank account because you're separating. I think you kind of muddy the waters there between what is a business asset and what is a personal asset. So you want to not pierce the LLC liability umbrella, for really any reason. So, if it were me, I would set up a business bank account, and there's not really, depending on the bank that you use, like there's not really a big drawdown to setting up a business bank account.
Okay, thanks.
Yep. The credit card piece of it, and again, this is a caveat. As long as you are, able to pay off your credit cards and aren't carrying a balance on these cards on an ongoing basis, a business credit card can actually be quite beneficial from just from a perks standpoint. So there's all sorts of business credit cards out there. I won't get into specifics, but they can add a lot of value. If you're putting in, quite a bit of expenses per month for your business, it's better to pay those out of a credit card rather than your bank account. Just one, a lot of times credit cards, if there were any, sort of fraudulent activity or any purchases that shouldn't have been made. Again, if you're making those on a credit card, a lot of times, there's liability protection through the card. It's sometimes hard to get that through a bank account. And then two, obviously you can earn rewards and perks and stuff like that through the credit cards as well. One of the biggest things, that I see with business owners too, is that you're so worried about growing your business and making sure that you're doing the right things to get more clientele or have a better product. A lot of times the finances and the income and expenses kind of get put on the back burner. So it's one of those things where it's a necessary evil that you need to make sure that you're on top of. And if it's something that isn't your forte or something that you don't necessarily enjoy to do, it's worth probably getting an accountant. Now, again, it's not gonna be cheap to get an accountant to help you with this. You're probably looking at a couple $1,000s for somebody to help you actually manage your income and expenses, through QuickBooks or through another software. But it's something that from a tax reporting standpoint, or if you ever get audited, it's very beneficial to have a proof of record of what your income, what your expenses, in a clear way that you can easily gather that. So again, especially if you're a solopreneur, you don't necessarily need to have somebody that's helping you out with QuickBooks if it's something that you want to tackle on your own. For example, like I manage my own QuickBooks. I don't have a ton of different different charges and expenses throughout the month. I have just fewer larger charges, so it's easier for me to manage in QuickBooks, and it's pretty pretty intuitive to do. But I would say whatever software, whatever system you have, just have a system. It's not something that you want to wait until the 11th hour, at the end of the year to kind of get all of your business, documents in order. So again, this is more geared towards people that are either starting a business or are early on in the stages. So I'll give you an example of what I did personally. Typically, I keep anywhere from 3 to 6 months of expenses just in a high yield savings account that I can access if they're God forbid my wife and I were to get injured or disabled, or my wife were to lose her job or something that would come up. With being a business owner, there's a couple things that you need to think about. And again, it might be a little bit different if you're doing this as a side hustle, but if you're doing this more as a, kind of a, your one employment option there, you want to have more of a buffered emergency fund. So for example, what I did whenever, I was starting my business is I actually set up a year's worth of expenses that I know essentially if I didn't make any money in the first year of business, I wouldn't be worried about, necessarily going out and getting another job to make ends meet or doing a part-time income. I would have enough saved that I can focus on running my business and not worry about the personal finance side of things. One thing I see a lot of business owners struggle with is that they try to juggle a couple of different things, right? They try to juggle their personal finances and then also running a business at the same time. And if you're really going to start a business, you kind of have to go all in. And again, it's a little bit different if you're doing it as a side hustle, but if you're a business owner, it's very hard to kind of put one foot in the door, so to speak. And are out there trying to, one, make an income for yourself, and then two, trying to grow the business. So it limits your opportunities to invest in the business. So for example, if you need to get help with marketing, or if you need to have invest in products or assets for the business, if you don't have some sort of reserve fund, it's going to be very difficult to do that. And again, a lot of times people will put it on credit cards with very high interest rates that obviously isn't the best option from a financial planning standpoint. So something to think about, that if you are starting a business or if you're in the early stages, take a look at your emergency fund. And if you don't have one set up, I would say a good baseline is 3 to 6 months. But if you're a business owner, or if that's something you're interested in, think about potentially upping that number, and just giving yourself a little bit more protection to build the business that you want. So a couple, and again, this is more housekeeping and then a little bit of tax planning as well. It's very important to have a good filing system for how you're going to actually maintain records that you need throughout the business. So whether that's expenses, of things that you're buying for the business, or invoices for the services that you perform, tax returns, statements for the business. So for example, I use everything, or I save everything in Google Drive. And it's very affordable to kind of get the Google package. And it gives you a storage system where you can keep everything, for one, in case you get audited, and then two, that you can provide to your accountant at the end of the year, and save yourself really a lot of time. So, outside of that, it's just good practice, because, there are going to be times I refer back to different things or different receipts that I need throughout the year. Just to have them in one spot, it saves me a ton of time versus, looking through all sorts of files and stuff like that. It's just having it in one spot is a great option. So generally, most business, finance documents, so tax returns, receipts, stuff like that, are going to need to be kept for at least 3 years. Again, there's other statements and things like that that have a longer shelf life, so to speak. But in general, you need to keep most of these records for at least 3 years. So you need to have some sort of system that you're able to file these and keep, securely in one spot. Just from a personal standpoint, and again, from a tax filing standpoint, it's a great thing to keep up to date on your balance sheet, income and profit and loss statements. One, to understand, am I actually making money? Are my expenses, too high for what I'm actually receiving in income? And two, it also gives you an idea of, at the end of the year, all right, here's if I need to make strategic decisions of, adding a little bit more, making purchases in a certain tax year to lower your income and things like that you can do. And if you don't have a record or an idea of what you're actually making, it's going to be hard at the end of the year to basically come up with, a strategy that you can implement quickly. Again, if you're using a system like QuickBooks, and assuming everything is up to date, you can download these statements, at any point in time, really. And it's very easy with a couple clicks. So if you don't have a software, again, I use QuickBooks. It's not the only one out there, but it is pretty, pretty self-explanatory there. From a tax standpoint, so everybody's favorite topic, taxes, right? With being a business owner, a lot of times people think, man, I'm getting punished for, running my own business. But I guess what a lot of W-2 employees don't realize behind the scenes is that self-employment taxes, right? We all know that we pay Social Security and Medicare taxes through a typical job, right? But what we don't necessarily see is on the back end, your employer is actually paying the other half of your Social Security and Medicare taxes. Now, when you start your own business, right, you're your employee and your employer. So the IRS or the tax, from a tax standpoint, you're responsible for paying both halves of the self-employed taxes. So what that effectively looks like is that on top of whatever state, local, or federal income tax you're responsible for, you're also responsible for 15.3% of self-employment taxes. So Social Security taxes and Medicare, again, there's some caps and things like that on the amount of Social Security income that is taxable. The amount of your total income that's subject to Social Security taxes. Medicare, basically any dollar you earn is subject to Medicare tax. But a general rule of thumb, and again, this depends on your larger, financial picture, depending on if you're married, if you have kids, if this is your only income, if your spouse has an income, anywhere from 25 to 30%, that you should probably be setting aside from your profits to, be in a spot to pay, your taxes throughout the year. So a lot of times employee or, new business owners actually forget about making estimated tax payments. So typically those are, well, they're required to make if you're expected to have a business tax liability of at least $1,000 for the year. So effectively, if you're running a business, you probably need to make estimated quarterly taxes. And again, if you're making them and you end up paying more than what you need, the worst thing that happens is you give the IRS a little loan on some money for a little while, and then when you file your taxes, you get it back. So it's important to, one, set aside money that you have there for paying taxes, and then again, an accountant is going to be able to help you figure out the exact amount and then how to actually pay these self-employment taxes. Any questions so far? Yeah.
Everybody hates taxes.
Amen. So we'll talk about a few ways to maybe lower that tax burden here. So, there's different planning opportunities that you can have, again, from a income and expenses standpoint. Business owners have a lot of different options when it comes to reducing income through expenses. But again, when you purchase something, let's say you buy something for $1,000 and, you're able to deduct that from your business, it's still, let's say it's going to get you a 40% deduction or whatever the number may be. you're still actually spending $600. So it's not like you're getting the whatever the asset or whatever you're buying for free. You're still spending money that could be earned in profit, as an expense. So we want to be smart about the expenses that we have and not just buying them for the sole fact of lowering our income. But that being said, there are ways to kind of add to your personal income and also get some tax benefits along the way. So again, there's different types of investment plans or retirement plans that actually have benefits from a tax standpoint. And one of the I would say more popular options now is actually a solo 401k. And most people through work are at least familiar with a 401k plan. If you put in money, you can either do it on a Roth basis, which is after tax, or a pre-tax basis. Again, that's what's going to give you any sort of tax deduction in the short term. But there is options to actually defer income from your business into a retirement plan throughout the year. So there's a couple different types of plans that are out there, but solo 401ks are an option. Again, I don't have any employees, so I have a solo 401k plan set up. And you can actually, with a single member, LLC, you can set up a solo 401k. And if your spouse works for the business as well, you can have a solo 401k for you and your spouse. But beyond that, you would need to set up a more traditional 401k plan if you do have employees. So the benefits for a solo 401k, again, you have higher contribution limits. There's different options available, like loans from your plan and different features like that. It's a little bit more complex to set up. You can't necessarily just go on Fidelity or Vanguard or wherever and just with a few clicks of a button set up a solo 401k. You need to have some of the information prepared in advance. Like if you have an EIN number, you have to, a lot of the custodians out there will have a preset plan in place for solo 401ks, but it's still something that you need to review and need to see. If you do want to take options, if you want to have the ability to take loans from the plan, or you do want to have Roth options inside of the plan, those are all different features that may or may not be offered through whatever custodian that you choose to set up your 401k at. So again, they're not all created equal. You have to be a little bit more selective if you kind of want to set up a plan that's outside of kind of a cookie cutter solo 401k plan. One of the plans that's a little bit more, easier to set up is a SEP IRA. And these I would say, were more popular, back in the day, so to speak. It seems to be that solo 401ks are having a little bit more, their day in the sun, so to speak, from just volume of people setting them up, at least in my experience. But a SEP IRA works best if you're, again, self-employed. You don't have any employees, but you can essentially defer. It's a weird wording how they say this, but you can defer the lesser of 25% of your compensation, or $69,000 for this year. Again, there's no some plans have catch-up contributions if you're over the age of 50, but a SEP does not have that. They're pretty easy to set up. So if you go to, whatever custodian that you have, let's say you have a Roth IRA or an investment account at Fidelity or Vanguard or Schwab, they can set up a SEP IRA, or you can do it on your own, fairly easily. But if you do have employees, the downside is whatever percentage you contribute to yourself with a SEP IRA, you'd also have to contribute to your employee as well. So let's say you put in 15% into your SEP IRA. You can't say, hey, Mr. or Mrs. Employee, I don't really feel like putting money into your plan as well. The SEP IRA, you don't really have that luxury. I won't spend a ton of time on the simple IRAs because it's more for small business owners with employees. But how a simple IRA works is that there's lower, as you can see here, compared to some of these other options. there's lower contribution limits. So if you're looking to defer income, this probably isn't the best option because of the lower limits that it has. But it is, from a setup standpoint, can sometimes be simpler to set up than a 401k plan. But again, if you are a solo a solo 401k, or a solopreneur, a solo 401k or a SEP IRA is probably going to be one easier, and more efficient, and two more efficient to set up from a tax deferral standpoint. Now, if you're, not really ready to set up, business retirement plans yet, there are different options out there. So, what you can do from a personal standpoint is you can set up, a traditional 401 or a traditional IRA, so an individual retirement account. You could also set up a Roth IRA. Again, it's subject to different income limits to be eligible to contribute. But those are options out there. You can also set up brokerage accounts. So you can set up a brokerage account in the name of the business, or you can set it up as a personal account. So, for example, my wife and I, we have a brokerage account that we contribute to, every month, and we have that money there that isn't tied to retirement at all. So again, we can use it for retirement if we want to, but it's an account that you can invest in and have it grow, but then also access at any point in time. And unlike the traditional, IRAs or Roth IRAs, or some of the retirement plans, there's no 59 and a half age rule. So you can get money out of a brokerage account really anytime you want. You would just pay taxes, capital gains, either short-term or long-term, on the profits that you made, assuming you made any in the brokerage account. So nice part too is it doesn't have any contribution limit. So if you want to contribute $1 million a year to a brokerage account, you can do that. And you can take out money whenever you want to. So it's a really flexible account. I like to pair it up with other investment accounts for my clients, because I kind of look at it as your independence account. So that account that you can use, you can use it, if you need to add more money to the business, or if you want to use it for an early retirement or a potential, house purchase or second house purchase. I mean, really anything you want. And it's a pretty flexible account. So I always like to mention that.
Caleb, who would set up a brokerage account? Is that something that has to be done through like a CPA, or is this something that people can do on their own?
Yeah, a traditional IRA, a Roth IRA, a brokerage account, you can all set up on your own. It's pretty easy to set up. Again, if you just go to any one of those platforms I mentioned, or really any custodian that's out there, they'll have directions on how to set up a brokerage account or how to set up these other accounts. You can certainly work with a financial advisor is probably going to be more apt to be able to set this up than maybe an attorney or an accountant, just because that's something that they do on a regular basis. But you can certainly set it up on your own if you want to. Just kind of housekeeping thing to mention with Roth IRAs or brokerage accounts. If you are setting them up on your own, I unfortunately see sometimes, or more often than I'd probably like to admit, people set up a Roth IRA and they're like, I'm contributing whatever $6,000 or $7,000 a month or a year to it, but it's not growing. And then I look at a statement and it's been sitting in cash for the last 5 years. So putting money into an account is one step, but also selecting investments inside of the account is really the more important piece of the puzzle there. And again, you want to make sure that you're selecting investments that are aligning with your goals. So, if you're putting money into a brokerage account, for example, but you need to get money out of it in 5 years, you probably don't want to be investing in super aggressive investments that have the possibility of large fluctuations in the short term. So again, just making sure that your investments are actually aligned with what you want the money to achieve over time is really important in the long term. So again, just that was a bit of a high level overview of some business and tax and just structure standpoint of things to think about when you are a business owner or think about becoming a business owner. And again, I do have a free resource. I think Colleen's going to put it in the course notes there as well. If you want to click on this link or scan the QR code as well, you can get a free resource of 25 additional ways to improve your finances. And again, there's all sorts of stuff in there. It's more of a quick hitter type of thing where you can hopefully implement most of those pretty immediately. And then if you have more questions, and again, if you're a mid-career or an early pre-retiree PA, I want to make sure that you're saving enough and want to make sure that you're on track for having the retirement that you want. Again, I do have a contact link here, and we can schedule a free consultation to see if it's something that would be beneficial to work together on. And if there's things that I can tell you to help you out along the way, that either we can do together, or if it's something that I think you can implement on your own, I'm happy to let you know on the call there as well.
That was amazing, Caleb. Thank you so much. I do have a question for you, and I'm curious. It might be a like whatever, not attorney, CPA question, but I think you would know the answer to this. What are some like 3 to 5 things that people should be thinking about as for like tax write-offs, or things that they can like add to offset their like income, to kind of offset their expenses versus whatnot? So I'm just curious as to what things you see that people can usually write off that they're not thinking of.
Yeah, I mean, anything that's basically the way the IRS sets it up is anything that is ordinary and necessary for your business. So for example, I needed new computer monitors, right? So I bought new computer monitors. I deducted those from or I will deduct those this year from my taxes. I use a microphone, and I use headphones a lot for work, really primarily for work. So I'm able to deduct those types of things. If you use a card, there's different, I don't want to get down the rabbit hole of what you can and can't deduct on car expenses. But there is an ability to either deduct your car payments, or, take a depreciation deduction on those, or you can also deduct mileage. A lot of times mileage for most people is just a simpler way to do it. But if you are traveling a lot for work, it's something that you are able to deduct. One caveat is, it's my understanding, a lot of people try to deduct their commute back and forth to their office, and that's not deductible from my understanding. It has to be a trip that's not through your ordinary travel. So if you're going to see a client from your office, or if you're going to pick up supplies or something like that, that would be something that's considered deductible. Other things you can think about, there are different rules. If you are, like, let's say you go to a continuing education event, and it's for self-employment purposes. There's rules where it has to be, the purpose of the event has to be primarily for business purposes. So you can't go to a conference for one day and then spend 5 days in Cabo. That isn't going to fly. And again, if you ever get audited, that's something that would come up. But let's say you do take a trip to, I'll use Colleen, your state here. Let's say you take a trip to Florida for a conference. The conference is 5 days, and you decide to spend 1 day at the beach. You would be able to deduct, a lot of times, things like flights, or a percentage of your hotel stays, food, things like that, if it's for ordinary, necessary business purposes. And then last thing I'll mention, if you primarily work out of your home and you have a dedicated home office, a lot of times there's ways that you can deduct, your home office expense. Some things that people get into, can be issues is like, oh, I work at my kitchen table. So, and my kitchen table is in my living room, and my living room's 500, square feet. That doesn't fly. It has to be dedicated, a dedicated work area, and you can't use it for alternative purposes outside of work. So, you can't turn your living room into your office because it's the biggest room in the house. It's got to be somewhere that is where you conduct ordinary business.
I think that was really helpful. And I hope for you guys that this is just kind of like opening your eyes. Like, we don't expect you to be the expert on all this. This is why there's Caleb to help us. But, there's so many different things that you need to think about with your business. And it is often really helpful to just have an expert look at all of your stuff and get those few things in place so you guys can make more money in the future. Because there are so many like little hacks, that I guess that would be the right word, with like how to save money and what to do and then what not to do. I love how, Caleb, it sounds like you take more of the conservative approach when it comes to like tax write-offs and what you can and can't do, because you never want to get in trouble with the IRS, right? Like,
Yeah.
that is like not what you want to do. And so I think that this has been really helpful, Caleb, to kind of just open our eyes onto like, okay, the whole other side of building your business beyond marketing and beyond getting clients is, what do you do with all your money? So this is really, really helpful. The two of you who are on live, Alexis, Lilia, do you have any questions? I know you've got little kids running around too. If you want to put them in the chat before I let Caleb go, let me know. I'll give you guys a few seconds or a few minutes.
Again, if you want more information, you can, I have a blog, and then also I'm on LinkedIn or Instagram as well. That you can easily find me. So if you either Google my name, those will come up, or my, advanced practice planning. So.
Is that your handle on Instagram, advanced practice planning?
My handle is Caleb Pepperday _CFP.
Okay, awesome. I'll put that in the chat down below, guys, so you can access that later. And I highly recommend you follow him. I'm a big supporter of people on social media. It's a really good way to get some great content.
And it's free.
Okay, ladies, I don't think you have any questions, but if you guys are listening to the recording and you have questions, you can email me. Caleb's email is down below too. Feel free to reach out to him. He's a wonderful resource. So Caleb, thank you so much for your time.
Yep. Thank you. Thanks for having me.